All right. How we doing, Miami?
That's a good idea.
My name's Trey Lockerbie, host of We Study Billionaires, also the founder and CEO of Better Booch, so I had to do some product placement with my boys here. Anyway, we're so excited to get started. I have to kick it off here with the guy who's kind of shepherded my whole investing experience, which is Preston Pysh. This guy wrote a book about Warren Buffett accounting and studied Charlie Munger, and now he's at a Bitcoin conference. This is the journey you've been on, man. This is amazing. One of my favorite Munger quotes is, "Show me an incentive, and I'll show you a result." My first question to you is, what incentive might the U.S. have to adopt Bitcoin?
I think when you look at the incentive, it's a little hard to see at first glance because there's a huge incentive for the existing system that they've got. But when you think about how decentralized Bitcoin is and the implications of not being able to shut it down, the sound monetary policy that's associated with it, you can either cancel yourself out of that, or you can participate in it as early as possible in order to reap the benefits of what that means. And I think when you just look across all the other alternatives that are out there and how, when I look at Bitcoin, it's just got so much decentralization to it through the full node network. And then you can get into the proof of stake versus proof of work piece. And as far as I'm concerned, the proof of stake is just more of the same, right? Yeah. Right? It's just, you look at the proof of work, you look at all the full nodes, you look at the Lightning Network that's happening, immediate clearance, any transaction size, and I'm telling I'm looking at that from my own vantage point. I'm saying, you're not shutting that thing down. That's true decentralization with a monetary policy that's going to be predictable into the future, and if you don't want to participate in that, you're canceling yourself. So I think that's the real key thing to kind of focus in on.
When you kind of mentioned that more of the same, you've been talking a lot about the prospect of yield curve control, whether they're doing it or not.
Yeah.
How does Bitcoin fix this?
So for me, the thing that, there's a lot of really interesting things that are happening with it, but the reason I was so attracted to Bitcoin early on is because my opinion is the cost of capital is completely broke. If you're stepping into the bond market, printing a bunch of fiat, and then just buying the fixed income bonds, pushing the yields lower, pushing the prices higher, and then the cost of capital for equities and everything else is constructed as a premium on top of that, that's a recipe for disaster because you're flirting with, are we dealing with free and open markets at that point? When you're adjusting that cost of capital lower, pushing the prices of everything, real estate, equities, you name it, is going higher and higher and higher. That's the concern. So it's exciting for me when I see the dollar via stablecoin kicking off 10% interest, and then I'm looking at the interest that you can go out and get in the regular economy through the traditional banking system, and it's 1.5% or 2% and going lower, trending lower for 30 plus years, okay? For me, real fast, I'm saying, is that the real interest rate? And if it is, and that's the real cost of capital, and it's double digits, and I'm comparing it to this thing over here, is everything on the planet mispriced? Mm-hmm. And for me, I think it is, right?
Jeff wrote my favorite book, The Price of Tomorrow. Everyone should check it out, first and foremost. I wanted to embarrass him with that. But I also want to just say that, in your opinion, Jeff, I want to ask you, what comes first, hyperinflation or revolution?
So, wow. Just that.
I'm starting the morning off with
just that. So I think what people miss here is what came first, chicken or egg. The lower interest rates for the last 30 years and constant lowering of interest rates, manipulating interest rates down, that caused debt jubilee, or debt additions, more and more debt, that caused we can't pay that debt, was all caused by technology. And technology is moving faster and faster and faster. And on the other side, central banks are caught in a trap trying to make prices go up. So technology brings prices down. Central banks are trying to make prices go up, because if the system fails, it fails spectacularly. And so if you think about, a lot of people measure inflation from a zero rate. You shouldn't be measuring inflation from a zero rate,
Right.
because technology, it's probably been negative 3 or 4%, maybe 3% for the last 30 years, or 1%, 2%, and now it's going faster and faster. And so what's happening is, mathematically, the money that printing, money that you're making up, is actually pushing into these prices. And people talk, remember, 500 billion used to be a lot, and there were marches on Wall Street. And now you're talking tens of trillions of dollars, and there's no marches. And tomorrow it'll be a lot more, because if that stops, the entire thing resets. So you're getting further and further out on a curve, and the tail risk is not what people think. We are in a massively deflationary macro trend. Rates are going down. There is going to be constant easing forever. And because if rates go up, the entire thing unwinds to the ground. And that is really, I wish I wasn't saying this. It's a terrible thing to say, but it's also true. And I keep asking myself, technology is supposed to free our time. Why are we living in a world where we're corrupting money? And if we have corruption in the base layer of money, we have corruption everywhere. And so everybody's on this hamster wheel, working harder and harder and harder to try to keep up with this hamster wheel, and it's killing your time. And so when I saw Bitcoin and everything else, and I think Bitcoin is actually the best potential for an easier transition. I care a lot that people get through this, because everything else, including all the other coins, will be centralized. And if you think it looks bad now, imagine going into the future with artificial intelligence, robotics, and centralized control of the state. There is no free market, and somebody can change their mind and remove your freedoms like that. If you want to grow up in that type of society, that's where this path takes us, and Bitcoin is exactly the opposite. So
So I'm going to pass over to Mark on that, because when we talk about centralization, Mark's been a pioneer investing in all kinds of companies that are helping in this space, in this industry. How do you see us adopting Bitcoin on a greater scale, and through what technology available to us?
Yeah, I think the biggest problem we all face, in the sense that all day yesterday and the rest of the day today, we'll talk about how this is the money of the people, and it's about the future, and it's about global, but it's still really concentrated in a few hands, and that needs to change. The biggest problem is what these guys have been talking about with the other money. I'm wearing the shirt, "Keep calm, we'll print more," for a reason, which is the plan all along has been to do just this. Right? The plan since 1913 is to steal all of our wealth and hand it to a very small number of people at the top of the food chain through inflation. And look, as great as Miami is, and Miami rocks, this conference should be a little further north in Jekyll Island, because the creature from Jekyll Island is what we're fighting against. And it's not going to stop, and they're not going to stop. 39% of all the dollars created in the history of our republic happened in the last 12 months. What the absolute fuck? I mean, seriously, just let that sink in for a second. And trillion. Somebody shudder just a little when I say trillion. Okay? A trillion. Y'all have to sit here with us for 31,710 years. I would promise that would be most unpleasant to listen to me for 31,000 years. okay? And you got to spend $1 a second. $1 a second for 31,000 years is 1 trillion. And we just passed a bill to print 6 trillion. So the idea that this isn't going to flow into a store of value, that is hard money. Money only exists in a couple places. Gold is money, right? It is the only thing that exists in the absence of a liability. Bitcoin, the digital version of gold, which we heard the whole case for yesterday from the Winklevi, is going to replace gold, I think, not completely, because there's physical gold, there's a use for it, right? Having some coins in your pocket, if we get the Mad Max scenario and we're off the grid and all that, there's some value there. But Bitcoin will play a bigger and bigger role and accumulate more of that store wealth, because the dollars that they're going to print, and the yen and the euro, because it's not just the US. You know, the American exceptionalism. So, you know, Americans, we're like Notre Dame football fans. We remember a past that never was, right? I'm a Notre Dame guy, and we all think we won the national championship every year. We haven't won since '88. That's a long time. But Americans think we're in charge of this. We are a small part of the Bitcoin network, sadly. We should be a bigger part, and we shouldn't be fighting it with regulation. We heard some leading revolutionaries on that front yesterday. I don't even think I answered your question, but I had fun.
Nice. I love it. I want to touch on this, pull on this thread that Jeff threw out there about interest rates not being able to go up. And Greg, you've been trading risk for over 30 years, and you know this market, how it works. What do you think is the inflation rate that becomes untenable for the U.S. and the bond market?
Well, I'm an engineer by training, so I'm okay at mathematics. I'm going to borrow a line from my friend Mark. Math is hard, okay? But it's not that hard. You only need to have grade 11 mathematics to understand that we are in a debt spiral. Not death, D-E-A-T-H, yet. We are in a debt spiral. It's very simple. I agree with Jeff's mathematics. When you have total global debt to global GDP, your GDP being your tax base, total global debt to global GDP is 4 times, ladies and gentlemen. Okay. I started trading in 1988 when $1 billion was a big number. And now 1 trillion isn't even a big number, but walk through this grade 11 math with me. If it's a 4 times global GDP, and we put an average interest rate on that debt of 3%, which is low, and this is total global debt. This is not just government debt, so it's corporate, municipal, state, provincial, junk bonds, everything. 4 times 3 is 12%. That means your global economy needs to grow at 12% per annum just to keep pace with the organic growth of the numerator. I'm not going to ask for a show of hands who thinks global GDP will grow at 12% per annum. But I'm going to bet dollars for donuts, and I'm from Canada, so donuts. I'm betting donuts that global GDP will not even keep pace with the organic growth of debt due to the coupon. Okay? The error term in that is the fiat currency. The error term needs to solve this debt spiral. What does that mean? They have to print money. It's simple grade 11 mathematics. Don't overthink this. Okay? I've traded risk for 30 years. I'm going to start with my conclusion right now. Bitcoin is the best asymmetric trade opportunity I've seen in 30 years of trading risk. I cannot give you, thank you.
Second that emotion.
I cannot give you 100% certainty that it goes to the price target I think it's going to go to. But you just have to do expected value analysis. You have to give probability. It's a distribution. It's a long tail. Do some math. Put some probabilities on it. I can walk you through a probability distribution where Bitcoin is worth 0 with 95% chance, and I'm still a buyer at these prices. Okay? Again, math is hard. I am certain that our politicians in Canada failed grade 11 mathematics. I'm hoping that Justin Trudeau is watching this, because Mr. Trudeau was born on third base but thought he hit a triple, okay? He failed grade 11 mathematics. And as a Canadian, I have 3 kids. And I'm upset when global politicians do not even do their grade 11 math, okay? Bitcoin fixes this. Thank you.
So, since this is a macro discussion, I want to open it up a little bit more globally. So, Russia just came out stating that they are removing US dollar assets from their national wealth fund. China is trading with Russia at 1/3 of what they were a few years ago in US dollars. Preston, talk to us about the game theory at play here, getting away from the US dollars.
At the end of the day, I think the thing that a lot of people, that especially they get polarized in the politics side, Democrat, Republican, whatever, and not just in the US, what they're clinging to is something that they think is the solution or the answer. But when you look at what's happening, the social unrest that we're seeing, this is a global thing. This has happened all over the globe. The reason why, you go back to Bretton Woods, we had a policy that everything was pegged to gold. All the other currencies in the world were pegged to the dollar, okay? If you adjust the money multiplier for 30, 40 years and you get yourself to 1971, and all of a sudden you can't make good on the deposits of gold because you've been adjusting the money multiplier throughout that period of time, you have to come off of it. The US comes off of it, the entire globe, all fiat currencies, they all turn into fiat currencies at that point, but everybody's in the same boat globally, right? So now they're able to adjust the interest rates for the next, from 1971, 1980, you have interest rates peak, but they're able to adjust that and control it for 40 years, and here we are, interest rates pegged at 0% across the globe, not just here in the US, across the globe. You look at the central bank balance sheet, not just in the US, but collectively, and you look at how the printing is taking place and how it's growing, it's coordinated, right? And they're doing this to try to prevent social unrest, right? So I'm not going to bash a central banker. I'm not going to bash anybody. I think what we're doing is we're looking at a history of 80+ years of a giant credit cycle that's now down at 0%, and everybody's looking for the solution because you just can't take it into negative interest rates. We understand what happens, right? We understand that if we just keep doing QE and bidding bonds to the moon, that people that work middle class, lower class job, right, they're getting cut out of that. They're not seeing that. It's not trickling down. It's just getting bid into asset prices. So now we got to go to UBI, right? Universal Basic Income. Well, you start doing universal basic income, now all of a sudden you're having trouble getting people to show up for work, right? All of these things are interconnected. All of these things are a global issue that has to be solved through, in my opinion, sound money. You have to have sound money. You have to allow the cost of capital to be a free and open market so that it can naturally work itself out as to what something should cost. We are allocating capital across the board to things that don't make sense because of where the money's being, the pockets that it's being stuffed into. When you have a free and open market, a real one, that goes away and it solves itself naturally. So whenever I look at why I'm so excited about Bitcoin, that's the reason. It brings back free and open markets. It takes the social unrest out of it naturally, right? Focus on that is what I think the solution is.
And you can start value investing again.
Amen. And so, like, when you look at value investing, it's all about, hey, what are those free cash flows? How can I use a discount cash flow model to figure out what the real value of something is? But if you're changing those units that all of this is being measured in, you get this really unique situation where it's the person who has first access to the capital that's being printed and shoved into the hands of the lucky few. And Bitcoin provides this amazing, amazing opportunity to take that entire broken incentive structure and literally just flip it on its head.
Trey,
What
can
an
I
exciting
comment
time to
on
be
that?
alive.
The real challenge that Preston's talking about is the accounting fraud that goes on in that we denominate everything that we think about in, as I think it was Cameron, I'm pretty sure it was Cameron, said the ultimate shitcoin, which is the US dollar. You know, on Whale Day, they handed out shitcoin toilet paper. It was kind of cool. It had all the dead projects. But the real toilet paper is the US dollar. And if you denominate the S&P over the last decade in dollars, it looks like it's gone up, right? If you denominate it in gold, it's dead flat since 1996. If you denominate it in the Fed balance sheet, it's dead flat since 2008. So it's not up, it's money illusion. We are being defrauded of our assets through this stealth tax, this wealth tax of inflation, and it's, you know, Powell says that the cause of, or maybe it was Janet, the fabulous Moolah, which was the original WWE wrestler, or WWF wrestler woman, but she says that income and wealth inequality is caused by inflation, I mean, not by inflation, by government policies. Like, no, it's caused by you. It's caused by the Fed. That's why we have the highest wealth and income inequality in the history of the Republic, again, because the Fed was created in 1913. Remember, a dollar was a dollar from 1776 to 1913. It was worth a dollar. It had a couple little wiggles around the wars, but it was worth a dollar. Since 1913, as Jay Leno said, there was a rumor they were going to make a dollar coin. They already have it. It's called a nickel.
Chime in, yeah.
So yeah, that's this is it. I have to chime in with, and again, I'm an engineer, okay? Everyone talks about Bitcoin as being digital gold. I'm okay with that, but I'm going to borrow from Michael Saylor, who is a brilliant rocket scientist that is a walking mainframe computer that can actually talk English as well, okay? So that's Michael Saylor, and he says Bitcoin is digital energy. He loves the first law of thermodynamics. It appeals to me as an engineer. So you brought up the question. Russia is not going to hold US dollar on the reserves. I think that's brilliant. What should they hold? They should hold Bitcoin, right? Because they are selling natural resource energy for shitcoin US dollars. That's a dumb trade. But what if they were to start taking Bitcoin in payment for their natural resource energy, okay? Digital energy for natural resource energy. It's my opinion that this will happen within the next 10 years, that energy will be priced in Bitcoin. And when that happens, Bitcoin will become the de facto reserve asset of the world, okay? I love the USA. I've gone to school here. I have tons of friends down here. This country is amazing. But a reserve currency and a reserve asset are two separate things. When digital energy, i.e. Bitcoin, is used to price natural gas and oil, which I think Russia wants, and I actually think Saudi Arabia wants, but we have the petrodollar agreement. I know that Canada probably would like to have, or certainly some energy companies in Canada probably would like to start accumulating Bitcoin on their reserve asset base, okay? Yeah. I don't want the US to lose global supremacy. I don't want the US dollar to collapse. The mathematics are hard, but there is a solution. It's called Bitcoin, and I believe that central banks around the world, particularly in natural resource sensitive countries like Canada, would be wise to hold Bitcoin on their balance sheet. Canada, we knocked it out of the park again. We sold all our gold, okay? We have less gold than Haiti. Now, I love Haiti, but I think Canada should have more gold than Haiti. That's just me, all right? Justin Trudeau, please, I hope you're listening.
So, Jeff, Greg's point earlier, Greg's point earlier about the debt to GDP we're in. Because of you, now when I hear GDP, all I think about is what is not factored into that based on the technology at hand. So, and let's think about the debt we've piled on, 180-something trillion to produce 46 trillion in the last 20 years, I think you said. When does that collapse?
So that's why this whole thing is interconnected globally, and you're having you don't. By the way, this is why this conference is so incredible. You guys are in a moment in history. We're all in a moment in history, in the center of this whole thing that's transforming the world into a digital world, and Bitcoin is in the center of it. It's incredible, incredible. And so technology requires a currency that's native to technology. It requires it. It's native, and it requires a hard currency. And why does it require a hard currency? Because technology. Why do we use technology? You use technology to save your time. It should not come as a surprise. We could use spoons to dig holes. We don't use spoons to dig holes because we use other things, loaders and everything else to dig holes because it saves our time. That is the natural course, and that course should reduce prices over time. And when you think about it, when I used to buy CDs, I used to pay $19.99 for a CD, for each CD, and I had hundreds of them. Now I pay $10 a month for unlimited songs. Where does that show up in positive GDP? By the way, that thing, what I just talked about, is everywhere. Look at the photos on your phone. Look at how many photos you use. Where's Kodak today? It's everywhere. It should be really, really obvious to us that is the natural world. That is nature. That efficiency should be moving broad-based to our population, all populations, not just in the U.S., not just in Canada, all populations, and that would be a fair world. That's what I care. That's what I care about. But unfortunately, because we've lived in a different system, you have everybody cheating the rules, which creates fraud everywhere, and the manipulation of those rules, and everybody's spinning around this other system that is just entirely based on fraud, and it's showing up everywhere. So GDP in a technology-driven world actually goes down. And if it goes up, it goes up because, or in a hard money world, if it goes up because there's massive new industries that are formed that we don't see. It doesn't go up because you've manipulated the money multiplier, manipulated money.
All right, to wrap things up, I just have one more question for Preston, which is, did you jump out of your seat when Ray Dalio said he'd rather own Bitcoin than a U.S. bond?
Yeah, that was a really exciting moment for me personally, because I think for a lot of people that the argument, at least for this past year, has been gold versus Bitcoin. I've been looking at it and saying, I think gold's the tip of the iceberg here. I think the bigger piece is what it can potentially do to the fixed income market. And so to hear Ray come out and say that, for me, was really exciting. I was like, this guy gets it. You saw the people on CNBC kind of scratching their heads, saying, why is he saying that? But I think for anybody who truly understands the implications that it brings, that's kind of like the ultimate road of where this is leading. Now, the speed at which it gets there, we don't know, but that was a really exciting moment for me. And then hearing Stan on CNBC a couple days or a week earlier saying about the dollar losing its reserve status, and then Ray saying the same thing, I think tells people in the industry how big this is. This is huge.
Well,
this is massive.
These guys all passed 11th grade math and beyond. And the inverse of the hashtag math is hard is hashtag just math. This is just math, right? This is a mathematical certainty that the devaluing currency will continue. And it's not that Bitcoin's getting better. Bitcoin kind of stays the same. One Bitcoin is one Bitcoin. What's getting worse is the currencies around the world that you're denominating in, which is why it's a perfect store of value.
Greg,
And so here's a use case, you guys. Coming from Canada, I happened upon a group of young men from Guatemala, okay? I'm a privileged guy. I live in a G7 country. They seek me out. They said, Foss, we need to speak to you. I'm in the energy business. They're trying to create an energy farm in Guatemala to create the equivalent of Bitcoin Beach. They're going to use it in the lake in Guatemala, and they want to call it Lake Bitcoin. Guys, we are so privileged in G7 countries. The real use case right now is in countries like Guatemala. Look these guys up. They're doing real things. They have a Bitcoin exchange. They say, hey, we don't sell any. We're just buying and buying and buying and buying. Why? Because they're smart. They understand store of value. They understand the difference between a fiat currency, which is your checking account, and Bitcoin, which is your savings account. I'm borrowing that from a talk yesterday. Look, treat your currency for barter. Treat your Bitcoin as your store of value. Pass it along to your kids. Don't overthink this. And it's all a rounding error. Let's talk in 20 years, okay? Don't care whether it's 30, 40, or 50,000 US per coin. The probability analysis and the expected value is so exciting. This is a rounding error.
Yeah, I'm free in 20 years, so I think we should do this again on this date and circle back. I want to close out and just say thank you, Greg, Mark, Jeff, Preston. You have made such an impact, not only to me, but I know a lot of people here. Thank you so much. That's a wrap.
Thank you.